we were hitting multi-thousand gram silver intercepts over 20 to 80 meters. I mean, staggering numbers. It was a wonderful, wonderful moment. Eric Sprott, our largest shareholder, has put in 110 million US since June in 3 different tranches. And this last financing he led with a $50 million order. We now have plenty of cash for the next 3 or 4 years.
Greetings and welcome to our Wealthion show. My name is Trey Reik, and we're here at the Wealthion SCP Resource Finance Silver Conference at the Shangri-La Hotel in Toronto, which we're very excited about. And we were lucky enough to have Diane Garrett join us for a while. Diane, I know back from the Remarco days, and as she shepherded a very difficult journey in developing that mine successfully, and Diane is now the president and CEO of Hycroft Mining, also a deposit which has had its fair share of hurdles in the past. So Diane, thanks for joining us.
Thank you, Trey. Very nice to be here. I appreciate your time.
Perfect. So I think any discussion of the Hycroft deposit should start with a relative placement of its size in terms of resources, et cetera, in the pantheon of precious metal projects, both in North America and in the world.
Sure. It is among one of the world's largest precious metals deposits. Today, it boasts over 10 million ounces of gold in the M&I category and just shy of 400 million ounces of silver in the M&I category. So it makes it quite not only a large asset, but also very unique in that we have a substantial amount of silver, which will contribute about 40 to 45% of our revenues. So it makes it a very unique asset and located in an excellent jurisdiction of Nevada, USA.
And I'm going to guess, don't mean to put words in your mouth, but does your experience at operating at Remarco, which was South Carolina, give you any special insights into operating, clearing hurdles in the U.S. when you're in Nevada?
A little bit, yes, because we're very familiar with the permitting process in the U.S. In South Carolina, we were the first hard rock mine permitted in almost 25 years in that state. So we sort of charted new territory with the agencies and the regulators. In Nevada, because mining is second only to gaming as a commerce in their state, they know it very well. The regulations are very good. The nice thing about Hycroft is we're already permitted for heap leach and milling, so it puts us ahead of other developers in that sense. But we certainly spent a lot of time with U.S. Permitting regulatory matters, so we have a lot of experience.
And I think I have read that you have assembled a team, partially from folks who worked with you at Remarco and Newmont, et cetera. Can you talk a little bit about the key members of the team and how they have the skills to help you bring Hycroft to successful development?
Sure. So one of the things that I always say to our institutional shareholders is, I will never apologize for bringing in technical people up front because I want them to live with the asset, design the new plant, design the project, and work together as a team so that when you do start up construction, you're minimizing any potential risk. And you don't have your process manager saying, well, don't look at me because I wouldn't have built the mill that way, because he did build the mill that way. So we were fortunate enough to get almost all of our core team at Remarco to move from South Carolina, which has everything within 30 miles drive, to the middle of nowhere in the desert in Winnemucca, Nevada.
They were still at Remarco, the folks that you...
Most all of them were still at the mine.
Which is Oceana now?
Oceana Gold acquired it. And so I think it's a testament to, they were part of that discovery and the development. It's a testament to the culture that we created there. And what we saw is a very similar opportunity of really turning what was always known at Hycroft as a low-grade deposit into something more substantial, which is exactly what we did at Remarco. So they wanted to be part of that journey. And I'm just very pleased and honored that they would come join us. So we have our general manager that was at Hale. David Thomas is our general manager at Hycroft, and he is, led all of the permitting and regulatory work for the Hale mine. We have mine planners, mining engineer, head of technical studies. And then we did bring in a new vice president exploration because you want somebody that's familiar with those types of systems in Nevada, which are uniquely different than what we had in the East Coast of the United States. And that's Alex Davidson, who came from Nevada Gold Mines. And before that, he was with Newmont, Hecla, Rio Tinto. So we have a very high caliber team.
And the Oceana people aren't too upset with you?
I haven't gotten a Christmas card in quite some time from them. No, we actually are on very good terms still. Yeah, it's still okay.
Okay. So Hycroft has had a history, and I'm sure you get tired of answering this question early in any, but I've been doing this for 25 years, and I think I remember 3 occasions that Hycroft had very high hurdles to failure over bad planning, bad execution, bad PEAs, questionable management. So it's gotten this sort of stigma, which I'm sure you encounter every day. So can you just give a short précis on how you're going to turn that around?
Sure. You're absolutely right. Hycroft has an ugly history. In fact, when I joined as CEO, so many of my colleagues said, "What are you doing? Like, why would you do this?" Maybe I just like a challenge. I don't know. Few people remember that at Remarco, we faced the same stigma because it was a small, low-grade mine that environmentally was made a disaster of by a former small company operator. Even though it had all been cleaned up and reclaimed, there was just that stigma, that people couldn't get out of their mines and couldn't get past. And then we changed that whole thinking around with what we did at Remarco. Hycroft has had a challenging past. On the other hand, it's been a very successful heap leach operation off and on since the 1980s. But even Bob Buchan, the former chairman of Allied Nevada, that when they ultimately went into receivership, he posted not long ago that, he said, look, we were the victim of declining gold prices, over-leveraged balance sheet, $550 million in debt, and management mistakes.
I was just going to say the assumptions in the PEAs were always way too optimistic.
A bit optimistic. And, what I go back to is people, and I guess it's human nature and natural, is when you have things like that happen, they're so quick to look at the asset and think, well, there's a problem with the asset. Nobody's been successful with it, or at least Allied Nevada, a $4.5 billion company, was not successful with it. But as a former fund manager, where I believe that the people are the only asset you truly are investing in at this stage of development, people forget to look at the human factor. And, and I've seen it many times. It's not an asset. It's not a technical issue. It's a management issue.
Right.
Those things are fixable. If Mother Nature gives you a deposit that you cannot extract the gold and silver, that's an entirely different conversation, right? But that is not the case with Hycroft. So I heard this for the first 2 years I was with the company. And, we did what we did at Remarco. We put our head down and we did the work. And what we've demonstrated to the market through the metallurgical work is that you can recover this gold and silver. It's the sulfide ore now, so we'll be milling it. It is refractory. But we've been recovering refractory gold and silver for 45 years in the state of Nevada. So this is not unusual. And we're starting to turn that around. And then everybody who said, yeah, it's a large system, but it's low grade. Now with the work we've done and had these 2 very significant high grade silver discoveries, and we're starting to pick up some nice grade gold at depth, we're turning the notion around that, oh my gosh, we thought this thing had been completely drilled out. So it's been kind of fun to see that change. And our nickname in North America is Remarco 2.0.
There we go.
But we're going to make Hycroft bigger, better, faster, stronger.
You teased the recent silver drill results, which we're going to get to because it's a silver conference. But you just covered a lot of ground there. So
sorry.
The balance sheet was a big issue, right, with Bob, who, by the way, is a very nice guy and tried his hardest.
Very nice. We're good friends. He's a shareholder today, by the way.
Right. It was more the PEAs, I always thought, but their balance sheet obviously was a big burden. I believe that when you joined the company, there was about $200 million debt albatross. Is that roughly correct? A
bit over $200 million that we inherited. Right. Yes.
And then you got it paid down to $100, and then recently, I see that you have cash on the balance sheet at the end of the prior quarter of 140. And then tell us about this wonderful transaction that you were able to. Well, first, I forgot the meme stock.
The AMC and the meme stock.
Somehow
yes.
you unloaded $100 million in the debt to them, correct? Isn't that was your first sort of lucky Pierre moment?
Right. So in 2022, about the time, well, it was exactly when Russia invaded Ukraine, and there was a short squeeze on nickel stocks. And the meme stocks, these are the GameStop, AMC, Bed Bath & Beyond, that whole group. They also gathered about 12 gold companies that had serious, significantly large short positions, Hycroft being one of them, because the heap leach operation we shut down, it was we were depleting the leach material, and now it needed to be taken into the next phase of operation, which was sulfide milling. So now we had no cash flow. We were burdened with this debt that we inherited, and so the short position was massive on the company. So we got caught up in that, and we became a meme stock. And a colleague of mine in New York said, "Oh my gosh, I've got to introduce you to Adam Aron, the CEO of AMC, because he did what no other company has done, which he embraced this audience, and they have become very loyal to him. And they're a powerful retail audience and very sophisticated. They made the movie Dumb Money after them, but this is not dumb money. These are very smart people." And so we were trading so high. We raised $143 million. We paid off $100 million of the debt. And that audience has stayed loyal to us ever since. So we've got a great following.
Embarrassed to know, is AMC still a shareholder?
They are still a shareholder. They have never sold a share.
What's their percentage?
Today, they're just below 5% because it was a one-time investment. No, at the time, they were about 20% shareholder, but they've been diluted down with the other offerings that we've done.
Well, that was quite the poker play on your part, in my opinion. So then you were at 139, you have the 100, and then let's talk about the transaction that I think was a week or two ago.
Yes.
That went so splendidly well for you.
It did. It was a wonderful, wonderful moment. Eric Sprott, our largest shareholder, has put in $110 million US since June in 3 different tranches. And this last financing he led with the $50 million order. And, we timed it on a day when silver was pushing through 50. We've been doing extensive marketing and getting a lot of interest in what we're doing. But the big blue chip institutions that have followed us in previous companies, all said, we just really can't participate until the debt is gone. And I think it's very remarkable and says a lot about the asset and the development and what we're doing in this game-changing story that we're turning around, that they're willing to put money in to help pay debt, which doesn't happen, as you well know, being in the business a long time. So we brought in BlackRock out of the UK, wanted to own 10% of the company, and then we brought in
BlackRock, the gold equity investors.
Evie Ambro, yes,
gotcha.
out of the UK, in their gold fund and their mining fund. And then we brought in Franklin, Schroders, Tribeca, Global Natural Resources, the largest resource fund in Australia, and really built a book of just blue chip institutional investors. So that money then allowed us to transform our shareholder base. We're 80% owned by long only, the largest gold mining funds in the business globally.
Who have the long-term perspective.
Exactly, yes. And then that allowed us to pay off the debt entirely. We, believe it or not, we were able to get a discount on that debt, which was very good given that we were trading at our 52-week high and commodity prices were soaring. And the debt wasn't due for 2.5 years, but it was growing every month. And so it was really nice to get that done. And we knew, and Eric knew, and we had spoken about it, the biggest re-rating on our stock was really getting that debt removed, because we were always against this ceiling when commodity prices would go up because we had this overhang. So now that's cleared. We've seen the stock perform beautifully. We think there's still more re-rating potential to come. And with continued increase in commodity prices, now we don't have that overhang.
And not that you're thinking about another transaction this quickly, but does that position you for a year or two of the capital that you think you will need? Or?
Well, that's the other nice thing. Great question, because we now have plenty of cash for the next 3 or 4 years.
3 or 4.
So we don't need to come back to the market. So if anyone is wanting exposure to the development that we're doing in this news flow and these discoveries, they've got to come in through the front door into the market. Yes.
This October, Wealthion's putting the spotlight on silver with expert interviews, deep analysis, and a special in-depth report from our partners at SCP Resource Finance. To receive this report and other exclusive benefits, you can sign up to become an accredited investor with Wealthion at wealthion.com/accredited or by finding the link in the description below. Speaking of silver, Wealthion will be on the ground in Toronto for the SCP Resource Finance Second Global Silver Conference, happening on Thursday, October 23rd. Legendary investor Eric Sprott headlines the event alongside 15 silver mining companies presenting their top projects. It's a must-attend for anyone serious about investing in silver. Tickets, both in person and virtual, are now available. Find out more in the description below.
That's a great endorsement. And for viewers, Eric and a few managers like Dave Iben, et cetera, recognize the value of very large deposits. And for those who didn't see Eric's comments this morning, he actually singled out Hycroft as an example where all of the technical work that's being done and the transformation with this, type of a reserve at these prices, it's a no-brainer.
Right.
Right? I mean, I think that's really his bottom line in the investment. And when Eric says that, it's not like when I say that, people listen and they certainly know what they're doing. So let's talk a little bit about the sulfide challenge. And I'm not a geologist or a metallurgist, and I do think the previously thought view is that Hycroft had sort of expended its oxides and was at the sulfide state of development, and there's a need for certain equipment. Can you talk a little bit about that you might need and how that stands now?
Sure. Most all of these large deposits, and particularly in Nevada, they start out as low-grade heap leach oxide operations. And as you get deeper into the system, you start transitioning to sulfide. So it hasn't been exposed to the air and the environment, and it hasn't oxidized. That means you need a milling operation. You have to grind it finer to liberate the gold. So while we have a tremendous amount of infrastructure on site, and we will have some portion of our production be leach material, the predominance at this stage is milling of the sulfide ore. That's the predominance of the large resource that we currently have. So we're completing the engineering work now. We'll have our PEA, PFS out. We're targeting the end of the year, and that will have the economics with it, and that will tell us how we're going to, design the plant. We're looking at 2 different processes. One is pressure oxidation, the other is roasting. Both have been used for 45 years in Nevada. They're very conventional. And
roasting has the dirty word autoclave with it, right, in terms of building one and getting it permitted?
So the concern about roasting has always been the off gases that are produced.
Oh, right.
The reason we would be very interested in doing roasting, our ore is very amenable to both processes. Roasting adds a third revenue stream in addition to the gold and silver, because we would take those off gases, capture them, and create sulfuric acid, which is required and needed to produce lithium. And there's 5 lithium mines in Nevada. So they're going to have to ship in elemental sulfur and then build their own acid plants. So the only reason we would go roasting is that it provides a third revenue stream. So it's an additional economic benefit for our shareholders. But we've talked to the regulators about, because people say, can you permit a roaster, these days?
I was just going to say, can you get an autoclave in Nevada? I guess if all places you could. Right?
You can. I just saw a notice a couple of months ago that there were expansions permitted for 6 of the roasters for Nevada gold mines. The regulator said, look, the regulation is the regulation. As long as you are complying with the regulation, you can permit. And they went further to say that, for 45 years, we've operated with roasters in the state with no incidents. And Same with autoclaving. You can definitely permit an autoclave. The other benefit we have because of these high-grade discoveries, maybe we start with a smaller high-grade underground mine.
Mm-hmm.
If that's the case, maybe we could produce a concentrate, ship it to another plant, because there's other places that our ore could go to. So we have a lot of optionality to look at.
Mm-hmm. And the way the deposit has been described to me on the back of a napkin, because again, I'm not a geologist, is that you've never found, I think, what they call the flow source of where the mineralization left the volcanic aperture, and you think you may have found that recently, and that's where these very high-grade silver intercepts have occurred. Do I have that right?
Yes. When you have a resource of this size and scale, and this is what really attracted me to Hycroft, I looked at all the work that had been done by predecessor companies, and no one ever sat back and said, what is forming this massive, massive resource? It has to come from some plumbing deep within the earth, the high grade, the boiling zone, the feeder zone, if you will. Because what we've learned is that's how the low grade oxide is just precipitation of the minerals from deep at earth. So our team spent 2 years studying all the old data, reinterpreting the structures, and when we started drilling, we were hitting multi-thousand gram silver intercepts over, 20 to 80 meters. I mean, staggering numbers. And we did that all last year. We are seeing very interesting things in our core. In addition to these high-grade silver veinings, we're seeing things that large silver crystals, a mineral called argento-tetrahedrite, which really doesn't make much difference for you and me who are not geologists, but these large crystals tend to form very, very deep. That's your feeder zone, your boiling zone, if you will, where all of those minerals begin. And it told us we needed to look deeper because it's associated with a magmatic source. So we did some geophysics in this area, and sure enough, it showed a magmatic source and was identified as a potential feeder system by the geophysicist that we hired to do the work, whose name is Jim Wright, who is one of the best in the business. And so we're drilling on that potential feeder zone now. So that could be very exciting. It is exploration. It's a big target. May take a couple of holes, who knows? But
I was just going to say, how long will that take? 2 years to drill out, or?
No, well, the first hole, we are just about at total depth now, which is about 700 meters. And then we'll have to ship that off for assay and then get those results back to the market. So we'll know here in the next month or so what that looks like. But we've also got several other holes that are in the lab from our drilling on both Brimstone and Vortex, which are the 2 high-grade discoveries. And that was really the mandate with this additional money that we raised was, double the drill program. Let's drill out these high-grade systems and see how big they can be.
So boiling things down, what are, first of all, for investors who aren't familiar with Hycroft, share price has done fairly well lately. Do you think it's still? I would guess that you still think it's early innings in terms of the Hycroft story.
I think it's very early because we still trade at a discount to our peers. Yet we're in the U.S. We're permitted for heap leach and milling. We have so much infrastructure at site that would cost us $1 billion if we were to build it today. Fully operational labs, truck shops, 2 Merrill Crowe facilities, brand new leach pad, 3 stages of crushing, and you're in the U.S. and one of the world's largest resources. So I still think we trade a bit at a discount. We're going to have a lot of news flow coming out. I think
that was going to be my next question.
Okay.
road signs, milestones.
Yes. So we're going to have a lot of news flow coming out, continuous drill results over the next year on these high-grade systems. The market, I think, is convinced with all the work we've done this past year that this is real. The question is, how much bigger can it be? Then we'll come out with a resource on that, probably sometime this time next year. We want to do another year of drilling on it. We'll have the PEA/PFS out with the economics on the project. We're also, because of this commodity price environment, a lot of the historical in-pit material, leach material, if you will, has become economic that previously was categorized as waste. So we are looking at a restart of the leach operation, which we could do in advance of milling. And that would provide a nice bit of cash flow. And we can do that very quickly. We're permitted for it. We've got a leach pad ready to go. Be very minimal capital, and we could be up and running quickly.
So the leach pad was in operation and no longer is? Is that?
There are 2 historical leach pads that were in operation.
That was Allied Nevada.
That was Allied Nevada.
Okay.
And the one I'm referring to, when I came in, they were building a new leach pad for the next phase of operation because, and it's typical of these large systems, for the first 10 years of the operation, we're still going to have some leach material. Part of it will go to the leach pad, part of it will go to the mill, and then ultimately it will just be the mill. So that leach pad was being built. We completed it when I came in, but we covered it to protect it. And so it is ready to receive ores. So that's a very big benefit. That was an $85 million project.
How early could that ore be put on the leach pad in the grand scheme of priorities?
What we need to do...
You need the PFS first before you even do that?
No, because it's all part of the prior technical report, and it's all under the permitted plan of operations. We would need to do a technical report if we want to forecast production through the years, but we could do that in tandem with it. We could just restart the operation. We need loading equipment. And so, I mean, really within a year, you could be up and running. We're doing the analysis and the studying on that now.
So you haven't made that decision?
No, but we will over the next couple of months.
Interesting. So when you take all these components to the story, Rick Rule has a classic question, which he asks all investors to ask managements. What is the mission of your company, to get an idea of priority? So are you an explorer now? Are you fixing the sulfide challenges? How would you rank the mission of Hycroft right now?
Yeah, it's really interesting because the project has been a past producer, and we are considered a development stage company. But now with the high-grade silver discoveries, we're valued more as a silver company and an explorer. So we actually, on the Lassonde curve, we actually occur at 2 points. We're at that, exploration, high risk, high reward, but we're also on the pre-production because we're driving both of those things in tandem. The large project, the engineering is almost completed on that, and that's been 2 years worth of work. But now with the high-grade discovery, which came after we started the engineering work, it does give us an optionality for a company of our size and a single asset company to look at a smaller high-grade underground mine. So we're looking at those.
This sounds like a very Diane Garrett project. Lots of options. Complicated and lots of options.
And lots of options. But the as far as the milling part of the operation, this is going to be very conventional. So I think we're through our biggest challenges of kind of dispelling the myth that there's a technical problem with the ore body, dispelling the myth that there's nothing but low grade, and dispelling the doubt that we would ever eliminate the debt on the balance sheet. So I think we're in the perfect place right now to really grow from here. And with all the news flow we have coming out, I think it's a good time. It's the right place, the right asset, the right time.
So looking at the bigger picture, I'm sure you're not one that spends a lot of time, given what you're focused on, predicting a target price for gold and silver. But are you surprised at how well gold and silver have done this year following last year and say the last 3 months? Do you think things are ahead of themselves, or do you think all these macro fundamentals are finally coming together? I mean, it's been quite a run.
It's been quite a run. My crystal ball is fairly cloudy, so I don't like to predict commodity prices. I think we're all surprised to some degree. I mean, the fundamentals have always been strong for a very significant bull aggressive movement in both gold and silver. But I think we've all been a bit surprised by how quickly that's happened, which, as you point out, makes people say, am I late? Have I missed it? Should I get in? Should I wait? And so the recent correction we had the last couple of days, I think is actually healthy for the market.
I love it when we use the word healthy on correction. Very healthy.
It's healthy because I've just come back from Europe where people are like, I don't know what to do. I don't know if I'm too early, I'm too late, and I don't know what to do. So when you have a retrenching of commodity prices and that little correction, it is healthy. And then when you start rebounding from that, the market starts in general feeling comfortable that we are in this bull market to stay. Those are normal, healthy things to occur in the market. But it was ironic because when commodity prices came off the other day, everybody thought, oh my gosh, the sky is falling. And it's like, yeah, but we were at these prices just 14 days ago, right?
Right. The percentage gain in gold the prior week was the highest, the dollar gain in gold the prior week was the highest in history by a wide margin. So the weekly gain on a percentage basis was 8%, but we're at such high levels that the dollar gain, if you just think about it, like if you go from 4 to 4,400, that's $400.
It's $400.
And that's the highest, in history. So
yes,
the 230 got my attention earlier this week. I was sort of coming here, probably thankfully. But the best was the next day, which I believe was yesterday. I've been at the conference where gold started another $80 down, but closed up $15. And the few times I've checked today, both silver and gold are in the green.
Yes.
So that's unusual. Even that is unusual in gold corrections.
But there's something, I believe there's something stronger going on right now. This is not, in my opinion, it's not about just the US dollar. It's not about tariffs and what's going to happen. There is a movement here. When you see Tether announcing that they're, the blockchain company buying physical metal, it's silver being designated a critical mineral, and the US wanting to stockpile silver, you're getting a younger audience that is driven by gold and silver. That's something we never saw before. And it still has the geopolitical element to it, but there's something bigger. The undercurrent here is much bigger than I think, and different than we've seen in our years in this industry.
The way I would put what you just said is, I've said for decades we've followed, I call them the big three: the anti-dollar sentiment, the deficit in the U.S., and Fed credibility. But I really believe, and I think you're saying, that we've hit inflection points where the three together are starting to matter in a way that they haven't, in prior bull market segments.
Right. I agree with you.
So, and that, of course, brings us to, the change in allocations that we're seeing in the U.S. Jamie Dimon last week talking about $5,000 to $10,000 gold, and I think a 10 or 15% position. Morgan Stanley, 20% in their asset allocation.
Yes.
Jeff Gondlock, 25. So when I read these stories, I cannot believe Morgan Stanley is now recommending a 20% gold position.
I know.
You got to be kidding me. As Eric explains, for that to happen, you'd have to have gold, at 10,000 for sure, just to get those numbers up that far.
Right. Absolutely.
Excellent. So what else about Hycroft do we need to know? Did we cover everything you think is important?
I do. I think I just sum it up that, the largest precious metals funds globally have supported us in a big way, owning 80% of the company now. Eric Sprott, who's the quintessential precious metals investor, has gone in very big on this one, and he's been to site. And, we have a team that's got a track record of doing this, and our drill results speak for themselves. And I think we are going to show the market that this high grade and turning this project into something very successful is a reality.
Terrific.
So we're very excited about it.
Thank you very much for taking the time to talk about it, and please accept our invitation to revisit in 3 or 4 months.
Would love to.
And see how things are going.
Okay, great. And thank you so much. It's a pleasure speaking with you today.
Thank you, Diane.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next. Thank you all for watching. We'll see you again next time.